I want to talk to you about everything every small business owner should know about payroll tax deductions. So here's an overview I want you to pay attention to. The thing is that you are required by law to withhold payroll taxes on behalf of your employees, but getting withholdings and all those other payroll calculations can be a little complicated, right? And the last thing you want is to have errors in your payroll system. So in today's conversation, I will explain to you how to get things done properly without using software or a third-party payroll service. Let's first talk about gross pay versus net pay. So deductions and withholdings make up the difference between gross pay and net pay. So gross pay is actually the total amount your employee earns from their salary or hourly wage plus any bonuses, commissions, and other forms of compensation. So for example, if you pay employees twice a month, a salaried employee who makes $48,000 per year will earn $2,000 in gross wages every pay period. Pretty straightforward, right? So this gross pay is where most calculations start for the IRS's wages subject to withholding for employee paychecks. Some payroll withholdings are mandatory payroll taxes. Other deductions are voluntary, meaning what? Meaning your employee has the option to not pay them. Many voluntary deductions like health insurance or 401k contributions are pre-tax deductions that have the effect of reducing an employee's taxable gross pay. Once withholdings and deductions have been made, the remaining net pay is what you pay to your employees. So let's talk now about withholding versus deductions. Withholdings and deductions are often treated as synonyms on your pay stubs. Technically, though, the term withholding refers specifically to federal or state taxes that you take out of your employees' paychecks and send to the government. All withholdings are mandatory. Deductions are usually voluntary, and they include opt-in retirement savings, health insurance, or donations. So there are also some involuntary deductions, like when wages are garnished to pay back taxes or child support, and some deductions are pre-tax, meaning they reduce gross wages for tax calculations. Others are taken after taxes have been withheld. Don't worry if this is confusing. We'll actually take a closer look at specific deductions pretty soon. So withholdings and deductions have two crucial elements in common: taking out the correct amount for each employee and then sending these funds to the proper tax agency or service provider. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's now talk about mandatory payroll withholdings first. So we have the federal income tax, the state and local income tax, FICA, and state unemployment insurance, so SUI. So when we talk about federal income tax, it is your responsibility as the business owner to withhold and pay federal income tax for your employees. First, remember that income tax relies on two factors: gross pay or wages you pay an employee, and the withholding information that employees provided on their W-4 form. You already know their pay rate. Their W-4 form will tell you if you need to withhold taxes for them at the married or single rate, how many dependents they claimed, and any additional amounts the employee wants to be withheld from those earnings. You also have state and local income tax. So just like federal income tax, you will use gross pay as the base for the amount of state and local income tax to withhold. Every state sets these rates individually. Some states have no income tax at all, so you will need to become familiar with the rules that apply to your location and employees. You should also make sure that you are up to date on the latest payroll tax rates. What about FICA? Well, FICA is actually the Federal Insurance Contributions Act. This is a piece of legislation that requires employers to withhold Social Security and Medicare taxes from employees' wages. You must not only withhold a percentage of the employee's taxable gross pay, but also match that contribution up to the maximum wage limit. And these percentages do change, so always be sure you are withholding and matching the correct amount for the tax year. So this is really important. And basically, the FICA rate for employers breaks down for this year to 6.2% for Social Security and 1.45% for Medicare, or 7.65 total for each this year. Okay. You also have state unemployment insurance. So basically, every state sets its own unemployment insurance rate, so there is no standard across the U.S. So when you register with your state as an employer, they will also require you to sign up for the state unemployment agency as well. the important thing to remember when calculating SUI is that you must pay these taxes based on where your employee lives, not where you operate your business. So if you have a team of remote workers, this can be a bit complicated, but most states have online resources to help you find your way. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about everything every small business owner needs to know about payroll tax deductions. Let's now talk about state disability insurance. So currently, 5 states have some form of state disability insurance that is withheld from employee paychecks. So you have California, Hawaii, New York, New Jersey, and Rhode Island. And each has different requirements for withholding rates as well as the defined wages and more. Okay. And so you also have paid and family leave. So paid and family leave, or PMFL, is a type of benefit that some states offer and regulate. So these programs count on payroll taxes, which are collected and fund the programs that allow an employee who is really unable to work to receive regular payments as a way to make up for a portion of their lost income. In most cases, it can be used for reasons such as illness, childbirth, pregnancy, child adoption, or if an employee needs to provide care for a family member. So depending on the state, the payroll tax is paid only by the employer, and in some cases, both the employer and employee might be responsible. So for more information, it's just contact your state payroll department or payroll tax department. You also have FUTA, so you have federal unemployment tax. So this tax funds unemployment benefits for employees who lose their jobs. As an employer, you will need to calculate 6% of the wages each employee earns to determine how much you owe in federal unemployment taxes. However, FUTA is not withheld from the employee's wages, so don't make that mistake. Employers are required by law to pay unemployment taxes until an employee reaches $7,000 in taxable wages for the calendar year. After that, your liability for the year for them is met. So federal unemployment taxes are paid quarterly. So this is really what you need to think about. You also, now let's talk about depositing mandatory payroll taxes. So after you complete payroll, you must deposit the federal income taxes, Social Security, and Medicare funds that you withheld from you must actually deposit those funds with the IRS. There are 2 deposit schedules, semi-weekly or monthly, for these payments. So this is what it is. And you remember to file your quarterly report on Form 941 or annually on Form 944. So we're going to show you this again on the screen. So Form 941, that's for quarterly, or Form 944 for the annual report. So, and this must show the wages you have paid, the tips your employees have reported to you, and your employment taxes. You also need to comply with state tax deposit rules, okay? And so while it may not be the most fun or easy part of business ownership, running payroll comes with the territory. When in doubt, use always the services of a third party to kind of help you out. Let's talk about voluntary payroll deductions. Okay, so here we have three or four. So you have retirement plan contributions, health benefits, life insurance, or disability insurance. I want to first talk about those 3. So as an employer, you have a few options for retirement savings plans for small business employees. So you have a SEP IRA, simple IRA, or a traditional 401k. And most retirement contributions are pre-tax and are often matched by the employer up to a specific percentage. So for 2023 and 2024, employees can contribute up to $22,500 to a 401k plan, which is up from it really went up to $1,000 based on the previous year. So workers over age of 50 can add an additional catch-up contribution of $7,500 to get them to $30,000 annually. So what about health benefits? I'm still talking about voluntary payroll deductions though, okay? So small businesses with fewer than 50 full-time equivalent employees are not required to provide health benefits to their employees, but it is the top benefit employees seek out. So most often, collecting healthcare benefits cost is done as a pre-tax payroll deduction. Remember that health plan payroll deductions, including let's say payments for flexible payments, accounts basically for about 25% of expenses. Or if we talk about health savings account, this should be set up as a dollar amount and not as a percentage or the employee's pay. This is really important to remember that, okay? And so what I want to also say here is that you also have to think about life insurance or disability insurance. So many employers offer group life insurance programs as well as short-term and long-term disability coverage to ensure that employees still receive a portion of their salary even if they become disabled. And so like healthcare plans, these programs are often administered by a large insurance company that can handle registrations for you. You'll need to ensure that the proper deductions are made and paid for each employee that opts into the program. Boss, I want to quickly remind you of today's topic. We are having a conversation about everything every small business owner should know about payroll tax deductions. Another voluntary benefits and a voluntary payroll deduction here is parking or commuting. So commuter benefits allow you to deduct the cost of parking or transit fees on a pre-tax basis for your employees. So this is really important. Now, just note though, these funds cannot be used to offset the cost of biking related expenses, fuel or car insurance. Okay. And as of this year, the IRS limit on transportation or parking expenses is $300 to $350 per employee per month, and contributions are no longer tax deductible for the employer. Another form of benefits I want to talk about is health and wellness. So these programs can be a way to help promote wellness in the workplace and often include payroll deductions for discounted gym memberships, weight loss programs, smoking cessation programs, and preventative health screenings. So they can also have payouts for hitting certain goals, and benefits can be tax-free, but reimbursement and rewards for employees are not. So subsidies for gym membership expenses can be deducted by employers as business expenses for the tax year in which they were paid. So make sure that you know how different types of voluntary deductions affect taxable wages in your state. And the definition of taxable wages is generally the same across the board, but it's always a great idea to understand the subtle differences. For example, employee and employer contributions to a health savings account are made on a pre-tax basis in every state except for California and New Jersey. You also have uniforms. So if your business requires uniforms and charges employees for them, remember that payroll deductions to cover the cost cannot reduce a worker's hourly pay rate below the minimum wage of $7.25 per hour or impact their overtime pay under the Fair Labor Standards Act. However, you are allowed to prorate the deduction over a period of time so long as their hourly rate is not reduced. You also have union dues. So union dues are generally calculated as a predetermined percentage of the workers' gross wages and paid regularly to your local union. So the 2018 Supreme Court ruling Janus versus the American Federation of State, County, and Municipal Employees charged one second, please. Let me just quickly drink a little bit here. Okay. So I was talking about the fact that the 2018 Supreme Court ruling changed the rules for collecting fees for non-union employees working in union shops. Now, what happens here is that non-union employees must actively opt in to have these dues collected. And most unions also have specific requirements for pay scales and payroll. So it's really always important for you as an employer to take the time to review the rules and regulations with your union partner. And union dues do not qualify as pre-tax deductions. You also have, we're still talking about voluntary payroll deductions though. So you have a 529 education savings plans. So nearly all states now have some form of tax-deferred 529 education savings plans that actually offer a convenient way for employees to save. Some state plans do have minimum contribution requirements along with other 529 plan rules, and most are managed by large investment companies, but each state has a useful website full of information about 529 payroll deductions. You also have workplace giving or charitable contributions. So automatic giving allows employees to support their favorite cause by having a pre-selected amount deducted from their paycheck throughout the year. Remember that you need to get a written or electronic opt-in for this type of deductions and work with a reputable partner to actually make sure everything is kind of fine. You also have wage garnishment. So while employees do not have to consent to orders for garnishment of their wages, they are still considered voluntary since they are not part of mandatory government tax withholdings. A court of law may require that an employer garnish wages for non-payment of debt or child support or other reasons, really. And typically, a garnishment order will come in with instructions on how you will need to send those payments. They'll let you know the bank account, the ACH, the routing number, and everything. Let me give you extra credit here. So let's talk about exempt versus non-exempt employees. So we're still having a conversation about everything every small business owner should know about payroll tax deductions. Okay. So the Fair Labor Standards Act established the current minimum wage, overtime rules, and other labor standards that you need to be familiar with to get payroll right. It also defined employees categories that primarily relate to overtime protections. So you have non-exempt and then you have exempt. Non-exempt employees can earn overtime pay at a rate of 1.5 times their regular hourly rate, and they are required to be paid at least the federal minimum wage of $7.25 per hour. And what about exempt employees? Well, those are exempt from earning overtime. They must be salaried, earn at least $455 per week, and perform job functions such as executive, administrative, or professional duties. So understanding the distinction is this distinction is essential for your payroll and ultimately your deductions, because you must calculate overtime pay as part of gross pay for non-exempt employees. Not to mention that violations can be expensive. Employers who violate the FLSA minimum wage or overtime compensation laws may be legally liable for both the wage shortfall and damages. And so this is kind of important. And it's one of those things where you always have to pay attention to what really applies to your situation. Okay. If you are interested, let us know in the comment section. We'll send you a link that really talks to you, a link that the government has when it comes to everything about FLSA. And the government offers a handy guide to help ensure that you are compliant. And so remember to check your state overtime requirements here as well. And again, if you have any question, let us know in the comment section, and one of our team members will get back to you. We'll answer all questions that you have, and we'll also send you the right links to your state departments and also explain everything that you need to understand about everything every small business owner should know about payroll tax deductions. Thank you so much for your attention. I really appreciate it. Into this conversation, let me do a quick recap here. So when we talk about everything every small business owner should know about payroll tax deductions, we actually give you the overview. So we explain gross pay versus net pay, withholding versus deductions, and what's mandatory payroll withholdings and voluntary payroll deductions. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.